Welcome, everyone. Welcome to another exciting sales success webinar. As always, I am your host, Alex Nichols, coming to you live here. I'm Charlotte, North Carolina. And as you can see, I'm actually in a lecture hall here, which is kind of fun by myself a little bit. I do have Mike or Lando, whichever one you do want to talk to. Mike or Lando, how you guys doing?
Doing good, man.
Good, good, good.
I like that very much. Brian Shields, you're on again. I thought you had kicked you off all the time. How you doing today, my friend? Good, good, good. I like it. I like it. I'm going to go ahead and throw you down to the wayside. I like that very much. So, welcome, folks. We have a lot of exciting things we are going to be talking about today. I am really excited for this one. We are going to be talking about, I believe, four special features we are going to be going through today. These are new enhancements to our HELOC product specifically. So, this is things I'm going to be walking you guys through a demo of most of them. I think 90% CLTV. I don't have to do a demo for you guys. But what we're going to be doing is we're going to be talking about that both from the technical side as well as I have here, our great sales reps who are going to be talking about it from the sales perspective as well. So to me, this is really just offering both that really great fully automated HELOC, but now it's just a little bit better. And it's a little bit better because not just the hard work of our team, right? As you may have seen in my LinkedIn post, but also because of feedback from you all, right? Not just in these webinars, but things that, both Mike and Lando are constantly talking about through emails, through phone calls, sales rallies, all that good stuff. So these are things we're constantly making iterations on. We're adding new features. We're hearing from you all where those pain points are. So these are ways that we can really enhance this product, and we have, and we're going to keep continually doing so. So without further ado, right, I'm going to do a couple housekeeping items. First and foremost, as always, this session is recorded. So I will put a copy of the recording on our YouTube channel as always. Though I'm at an on-site, please give me a couple days and maybe Friday when it gets up there, as well as I will send out a copy and a bunch of this information out as well. There's going to be an email to everyone that registers. That email is going to have a bunch of information. So it's going to kind of go over a lot of this that we're talking about. I'll probably send a bunch of information, especially when it comes down to a breakdown of some of that 90% CLTV information. We're going to be going over things like multi-lien payoffs. So I want to make sure really the power is in your guys' hands. I do have a lot of that information already updated in the resource center, though some of these are going to be coming live here in a couple days to a couple weeks, maybe even further out. So really just want to set that expectation, right? And last housekeeping item, as always, we do Q&A in these sessions. So if you do have questions, please post them right down there. We'll probably be doing a lot of Q&A, I think, on this one. So if you do have questions through this, right, we're going to be monitoring that. Feel free, ask pretty much anything. And as always, we'll post this here in the chat as always, but you can reach us at salessuccess@figure.com. I'll send that, of course, in that follow-up email. It'll be coming from that address. So if you ever want to contact us, feel free to do so. We'll be sending you a bunch of information, sales advice, strategy, best practices, maybe not particular file questions, but of course, we can always give you guidance on product, sales, all that great stuff. So with all of that said and done, let's first talk about, I would say, probably the big one up front, right? And this is live. So I want to talk about timeframes on these products. I want to talk about things that, hey, what is live, what is coming, when is it coming, right? We want to set those expectations with ourselves and our borrowers. So as of right now, right, across the board, Figure Wholesale, right? This is live. And for a lot of our private label partners, this is live. Though again, maybe check internally if you do have some overlays. 90% CLTV, gentlemen. How do we feel about that, right? This is something that we did increase. Primary properties, right? We're just increasing that a bit more. Is this small? Is this big? How do you feel about that? Just 5% that we're bumping that up to. I
I
like
think
the
it's,
harder
I mean,
side.
it's a conversation standpoint, right? 5% doesn't sound like a massive increase, but it gives you quite the opportunity to go through and consolidate debt and take things in a traditional world where you're going to throw yourself into an MI situation that wouldn't be able to be done, right? They're going to cap your cash out ability at 80%, keep you out of that MI range. We're going to provide an opportunity to be able to consolidate, put things through without having that MI adding in, which can save a client a couple $100s a month. So it's a conversation point, and more than anything, it's an opportunity that you didn't have before to reach out to past clients, speak about things, and anything, as we know, conversations can lead to opportunities. So more than anything, that's where I see the benefit, Alex.
Yeah, check out your pipelines too, right? If you've had borrowers that didn't get offers in the past, that were on the cusp, maybe they're just kind of like flirting with that 85%, maybe an extra 5% gets them through. So it's a good opportunity to go ahead and re-engage your pipeline, look at past declines that you may have had, see if it works out for them.
I think that's really the great point too, right? As Landa's saying, there's opportunity, and as Mike's saying, look back. In fact, I was just helping a loan officer today where that's what was happening was they were going through and they were hitting those CLTV caps. Well, right now it's 90%. That's what was happening to their borrower. Well, a lot of CLTV there, or probably not a lot of CLTV in that case. But that's something where I'd say look back in the past, right? Where we had those 85% caps, right? Maybe your borrower's been paying down that principal, things of that nature. So we do have those filters in Lead Portal. You can kind of go in and take a look or just go back in the previous pipeline. But just run those inquiries. For a lot of you, especially those in figure wholesale, you run an inquiry. If there's no offers, well, it doesn't send anything to the borrower. So no harm, no foul. It's just a soft credit pull. It doesn't trigger leads. You know how much I say that. So really, it's just taking a look. Hey, maybe this will put them over the threshold to where then they get offers that can help out with that, right? As well as this can help out with other things as well. And we'll kind of tie that into, of course, like multi-lien payoff. But to me, this is really just something that's been asked across the board for a while now. I really like the hearts and the thumbs up and everything. So this is just feedback you've all given us. We worked with credit and, our product teams and everything, and we just bumped it up there. So take a look. Again, I do have that resource center in Lead Portal. You can go in there, you go to the HELOC folder, and I have that product guide. And if you go into the product guide, we have our little, eligibility tables. And I have that now updated to reflect properly for the 90% CLTV. So if you really want to dive into it, say, okay, let's take a look, let's see how this goes. But really, it's just run the inquiry, see if your borrower gets offers, kind of go from there and, kind of dive into it. But I think that's really it for 90% CLTV. Unless you guys have anything else to say, we can move on. Fair enough. All right, we're going to move on to multi-lien payoff. Folks, if you do have any questions, though, on 90% CLT, post them in the chat. Otherwise, we're going to move on. All right, let's talk about multi-lien payoff. Now, quick little Alex disclaimer at the bottom, I suppose, right? This is something that you may have seen in the marketing material and some stuff. We have been working very hard on this for a while, right? And to, set that proper expectation, this is because we don't have escrow. This is because we don't have those more manual processes. Now I'm in the dark. This is kind of fun. This is what happens when you work on site. So the idea here, when you're talking about multi-lien payoff through what we're doing, right, because we use Stewart, right, we kind of go through those lien payoffs, we still have to build it into that automated process. What happens when you're in a fintech company? Well, sometimes bugs appear. Sometimes when you're working with technology, well, once in a while, when you think the best has happened, sometimes, well, you need to iterate a little bit. So if you've seen a couple times, we've released kind of some marketing material saying that's live. It was for a short bit, and then we've had a couple hiccups. So I want to make the announcement right now, multi-lien payoff as of right now, this moment, we had to turn that off. We're doing a couple little tweaks on the back end. This is nothing to do with like any policy changes or, any big things that affected borrowers. It's a technology thing. And that's the fun thing with being a fintech company. So I hate saying it. I really wanted to come say, hey, go do them today. Unfortunately, just give us a little bit more time on this. It looks like products just got to do some tweaking on the tech side of it. Again, this is a way we can make it, as fast as possible and as easy as possible for you all. But it turns out there was just a couple little bugs in the system. I'm not a tech guy. That's why I talk for a living. I don't know code. So I'm going to show it to you, and I'm going to say coming live soon, right? We're going to make that as soon as possible. Can't give you an ETA, though. Maybe a couple days, maybe a couple weeks, who knows? So we'll take a look there. You'll get an announcement. Don't worry. And of course, you'll see it once you run your inquiries. So with all that said and done, let's go ahead and take a look at it here in the Lead Portal. Let's see what multi-lien payoff looks like. And if you went ahead and took a look as well when it comes to that, you definitely, if you've paid off, say, like a junior lien with your borrower, if you've used the Lead Portal before, this is something that's not new to you. So we're going to go ahead and take a look, right? We're going to go into Lead Portal. We're going to run an inquiry. We're going to say, okay, my borrower, is looking to pay off that equity. Maybe that is a HELOC. Maybe that's a mortgage, right? Maybe that's something else. So as always, we go in, we create that inquiry, we put in that property address for financing. And what it's doing is it's pulling that property data, it's taking a look through a third-party method, and it's looking at some information through Experian. So we're going to fill this out. I'm going to be putting in the property type. I'm going to be putting in if it's listed for sale, put in the borrower's information, right? Their financial information, referral source, and of course, certified permission for a soft credit pull. Once I hit continue, well, we're going to go ahead and confirm that. Now, what's going to happen here is it's going to load offers. Takes about, 30 seconds. We load offers. It comes through. And then, of course, with direct debt payoff, I always like to say you do have to select a term to see that option when it comes down to offers. Now, this is a big thing. We're actually doing some testing on this. We've gotten a lot of feedback on that. We are actually doing some testing right now to put this more upfront to make this an option ahead of time. So no real announcement on this yet. This is something that we're working through more from a design aspect. But I'll say from a technical aspect, make sure you select that term first, and then you're going to see it here at the banner at the bottom. So everything I've said, you already know this. You already know how direct debt payoff works. You've attended our webinars before. But with multi-lien payoff, that's how easy it is. It's all built into IntelliDebt. It's built into the direct debt payoff system. So, of course, borrowers can pay off all their existing debts. But with that multi-lien payoff, once that goes live, you're going to see every debt that we have available. So not just junior liens, we can pay off pretty much everything. And not just when they get offers, but we're going to have win back as well. So maybe it is a situation where they have that high CLTV, or maybe it is a situation of DTI or other factors. Well, maybe they can pay off those mortgages, right? Maybe they can pay off those HELOCs. So this is just going to allow you more opportunity in here for them to be paying off those debts. All right, I'll stop talking. You know how much Alex likes talking. So, Mike Orlando, what do you have to say on this? What kind of things do kind of pop into your head when we were talking about multi-lien payoff earlier today?
So I think one of the things to think about is that in this case, you're typically consolidating debt, right? When you're paying off more than one lien, there could be the process of being a cash out refinance, things like that, where LLPAs come into play. In this case, if I'm paying off two liens that are on the property, I'm taking first lien position, which, as we know, is better pricing because there's less risk involved. So from a figure standpoint, the pricing is better compared to some of your conventional options where it's now a cash out refinance. You're getting hit with LLPAs, which can affect your pricing and doing those types of things depending on what type of property type it is. So I think it's one of those options you just look at and you say, hey, like we may have a better priced option to be able to consolidate and do what you're looking to do than what your conventional options could be. So that's one thing to keep in mind.
Yeah, I think you pretty much nailed it right there. It's a good opportunity to be an advisor to your borrower and see what kind of like the best option is for them, whether that's one or sometimes it is two, to move the HELOC down in the first position if it all makes sense with blended rates and that type of thing. So again, good opportunity not to just let the borrower kind of go through this alone, but to be that trusted financial advisor for them.
Now, what I like about this as well, you can tell a little bit jet lag, maybe still, I come from the West Coast to the East Coast, is again the fact that since it's built in, this does not change your workflow at all. So once we make this live, you're just going to start seeing these naturally. So it could be a conversation, maybe a borrower wants to tap into some equity, or again, I say this a lot, they're probably not thinking about a HELOC or tapping into equity. They're probably coming to you because they're like, hey, I need money for something. Well, you're going to run one of these. You're going to be able to see this, and suddenly, oh, there's a conversation. They have credit cards to pay off. Maybe they have multiple liens to pay off. Maybe you kind of come down, you can play around with it, right? And you can have those discussions and maybe start making different scenarios. So you'll be able to see how this all breaks down, right? When it comes down to it, you'll be able to see those total loan amounts. And then when you see all of this, there is that modify button, as always, right? So if you've used direct debt payoff before, literally nothing is new. I'm not training you, I'm showing you this is going to be a new feature. So then you as a loan officer can, do all this in a couple different ways, maybe sit down, see what the different scenarios are, then call up your borrower and have a conversation with them. Whatever that may be, just keep in mind, right? This is again something that we want to make live as soon as possible. So as soon as I know more information, you'll know more information. And of course, we'll make those announcements. So just stay tuned with that. That's going to be really, really big. And we're going to keep iterating on that, which I think is going to be really, really good. So a lot in the work there. This is our team's number one priority right now. I can tell you there's a lot of conversations happening as I speak. All right, gentlemen, anything that you want to add on to there? Anything about multi-lien payoff at all before we move on to our next subject?
I mean, not really. I think I think you need to understand too, it's going to depend on what the system gets back. So, from a loan officer standpoint, think about like your down payment assistance loans, right? If that's a forgivable second, it may not be reporting on credit. We may not get that information back from Method because it's not a valid debt that they're actually in repayment on. So, when you're dealing with situations like that, understand that we are limited to what the system can intake upfront as an eligible debt. So, just kind of understand what we're looking to pay off and understand, hey, this may not be an option for this individual customer, because as we know, depending on the state, some DPAs are do require a payment, so that could be an option for you to be able to pay off, and some of them don't. So they could be a silent second. So just keep in mind what you may see or what you may not see. Ask those questions up front, allows you to understand option yes or option no. So
All right, perfect. All right, now we're going to move on to our next subject. This is going to be about ID upload, which we know is a frustration point, right, for your borrowers. One of the big things is, of course, we need the name on the application, right? When you put it in the inquiry, or some of your retail partners have that referral link, we need that name to match their ID, driver's license, passport, state ID, permanent resident card. You've heard this a million times from me. So what we're doing is we're going to enable very soon the ability for you to pre-upload the ID during the inquiry to pre-fill that information. Now, your borrower still needs to upload a photo of their ID. I want to make that clear. They can take a photo, upload a photo, but with you uploading it ahead of time, maybe their photo fails. Well, our team can use your photo. Or, again, this is something that really allows you to see, oh, they did have a suffix. Oh, they did have a double last name, right? So this is really going to take out hurdles in the process. But please, everyone, come over to me just a little bit here. When I make these demos, I do have to kind of decide, are there text on there or are there no text? Well, I made you a text demo to put on the email. I forgot to make the other one. So you're going to see text on the screen. Just ignore that completely. I'll send it out during the email, right? So a little bit of magic behind the screen. So what we're going to do here is we're going to take a look at how this process is going to work. So with this very much, again, it's going to live and breathe in the inquiry tool. So for you retail partners on the correspondent side, if you have a referral link, you've heard me say it many, many times. There's a lot of great uses for this, but the inquiry tool, if you can do it every single time, do it every single time. So we're going to go in here. We're going to hit create new. This is just another reason to use the inquiry, because what you can do in here is you can immediately go in, you can upload that ID. And what that's going to do is not only just put that ID on the file, it's going to pre-fill that name, date of birth information, so we know that it's accurate exactly the way we want on the system. And again, driver's license, passport, state ID, or permanent residency card. Those are the four we do accept. So you'll put those in. We just need the front of the ID, please. That's all we need. And this is something too, I'm going to put more and more in the resource center on this. I really want to make this clear. You can't see it because of the text. I apologize. Oh, there we go. Okay, it's kind of went away. It needs to be all four corners showing on a clear dark surface. It needs to be very visible, right? We want to make this as clear as possible because this is a fully automated ID verification model. So please make it as clear as possible if possible. But again, maybe the borrower just sent it to you, and that's perfectly fine. But if you do see it's cut off, if there's glare, if you're in Florida, good luck. But this is really something that I want you to be really cognizant of, because this is a lot of the times the conditions we see and a lot of stuff like that. So we want to get a clear, nice, unexpired ID, right? All four corners showing. So our system's going to go ahead and approve that. So once we put that in, it's going to pre-fill the name, the date of birth. But what's also nice, it's going to do the address if you want it to. And of course, you don't have to. Maybe they're doing a secondary, an investment, whatever that may be. But we're going to go ahead and make that selection for address this time. All right, it's the primary property. We're going to go through that way. Saves you a little bit of time typing. It's going to go ahead and fill that in. We're going to need to fill in the rest of the information. Of course, that's not on a driver's license last I checked, right? But with this, it's going to be filling in, of course, their name, their date of birth. You'll still need to put in their personal phone number, right? But this is something that is going to save you time typing. So to set that expectation, this really is to remove that roadblock when it comes to the name. When it's an Alexander on the driver's license instead of an Alex, when someone has a suffix, because it doesn't matter how it's on title, it matters exactly how it is on that driver's license, passport, or whatever it may be. So really, this is for pre-filling the information and kind of making sure that it's all accurate to remove that speed bump. Because again, if the name's wrong, we have to do a modify restart. The borrower has to restart a whole application. We keep the same pricing grid. We try to keep the same offers, but it's kind of a pain point for borrowers. So this is so important for us. But again, to set the expectation, the borrower does have to still upload their ID. And the idea there, it really is for, both compliance and kind of a security sake. Borrower's still going to take a photo or upload a photo of their ID. But again, if it fails, well, then we have this copy on file. Our team can then use that. So there's a little bit of built-in redundancy that I think is really going to help out. But at the end of the day, it is optional. It is just a big thing that we've been asked time and time again. So we are adding it in. This is not live yet, but it is coming live very, very soon. Hopefully, in about a week or so. But again, TBD, we are still doing the final touches and passes on this. Gentlemen, I'll put the floor to you. Any thoughts on this? Anything that you want to add?
Yeah, I mean, look, I think this is kind of business as usual. Most of the time, guys, if we have a customer filling out, an application on our mobile website or something like that, what are we doing? We're requesting ID, other documents up front, and then we're making those edits before we push anything through to underwriting or, get the file live. So in my stance, it's just a simple part of your process. Ask them to send an image of their ID, upload it. You're avoiding having potential hurdles, restarts, or roadblocks down the line. Take the extra 2 minutes to save an extra 2 days. If something goes wrong, you're certain that it's filled out correctly. So I think it's just part of the process. Hey, shoot me a nice image, a JPEG of your ID, upload it, save yourself some potential problems down the stream.
Yeah, I'm really excited about this enhancement because, for starters, it seems like such a simple thing, right? Getting the name wrong in the application because it's either, there's a typo, there's a misspelling, we don't have the junior, or we put junior when it's really the second, or, just anything like that, right? It just seems like a silly reason, to be honest, like to have to go back and restart these things. The other cool thing about it too is it's going to cut down on conditions and the ID getting kicked back later down the line. So I'm really excited about this enhancement. I think it's going to really cut down on a lot of some of the restarts that we've had traditionally. So yeah, it's a great thing. There is a question that I'm seeing
Oh,
pop
go
up like
ahead.
right in front of me here. Speaking of IDs, is can we scan the ID to send it in? I would suggest not doing that.
Hmm.
Take a picture with your phone because what happens is a lot of IDs, driver's licenses especially, right, are white based backgrounds, right? And when you scan it, it's just going to be white all the way around the edges. So we have to remember it's not a person looking at these licenses at all. Okay, it's going to be a computer generated system that cannot always distinguish what is the beginning and the end. Where does the ID begin and end, right? So best way, put it on a dark surface, take a picture with your phone. Make sure that you're not cropping it too tight. It doesn't have to be perfect, doesn't have to be pretty. It just needs to be clear. Make sure you can see the background surface all the way around, all four corners, all four sides.
All right. Very last thing, folks. And this was not in the announcement LinkedIn post I made. This was not on the marketing emails. This is actually special for you all that attended this webinar. This is a new feature that's going live on Monday. So this is not something that we've really advertised. We're going to be getting some comms out on this, but I wanted to be the one that told you all. We, in an effort to really kind of increase communication, we not only are going to be sending you emails, we are going to allow you to opt in to SMS communications via text, right? This is something that has been feedback across the board. Obviously, people wanted to get text messages about what's going on with their borrowers' apps, right? I think that's a common ask, and I think that's completely rational. That's the way we work. So our team, especially our marketing team, has done a wonderful job getting that all built out. And we are doing the final touches on it now. So it's going to go live on Monday. So with this, it's going to be a very, very easy way where you're going to need to opt into it, but you can do so right in Lead Portal. So in Lead Portal, you're going to have your user profile. And if you go ahead and click on that, once this goes live, there's going to be a new tab in your profile where you can click on notifications. This is where you're going to allow that text and SMS communication, right? With this, you can just do it for that default contact, right, that you have on your little contact card that your borrower is going to see, or you can change the phone number as well. So this can kind of personalize it if you want to go to a different mobile device, right? It just depends on your workflow. It really simple. You can just change the phone number is really what I'm trying to say. But really when it comes down to it, you just say, okay, I'm going to manually opt in. Great. And now once you go ahead and hit save, very simple, the communications that will send via email, anything on conditions, all of that, that is going to then be texted over to you. So just easier communication. We're going to be building that over time as well on the more things that you get communicated on, how you get that communication. We have such wonderful leadership and ops, and they just want to keep building that out for you all. So this is kind of the next, really to me, I wouldn't say big step. This next step, our marketing team did a really great job on this. So look forward to this on Monday. And again, I think I'm the first one telling anyone this, which is kind of fun, right? So look forward to that. Otherwise, I think that's all the product enhancements I've got all for you. So as a recap, right? 90% CLTV. That's a lie right now. You guys can do that. Go back to your previous pipeline, right? Mike and Lando were saying that. Really just look over everything. Look for really opportunity when it comes to it. Go to the resource product guide. That's going to have all that information on guidelines. Multi-lien payoff. That is going live hopefully very soon. No ETA on that. A couple bugs we got to work out. So keep that in mind. Multi-lien payoff. We are working behind the scenes literally right now as we speak. And then we are going to have that ID pre-fill that is coming live here very shortly. No ETA, but they're just putting the finishing touches on that. So they just don't want me to hold them to an actual date. And then for this SMS communication, that is going live on Monday. So a couple big things coming out. We're getting the rest worked on. And then from there, well, hey, we're going to do more and more, right? You guys are going to give us feedback. We have things on the roadmap I'm not going to talk about. So this product, again, is just going to elevate and elevate. So keep that in mind. A lot of great things. I'll shut up. I get weird energy in a lecture hall. I should have been a professor. But with this, hey, Mike Orlando, I'm going to pass it over to you. I'm sure we got a lot of great Q&A in there. So let's go in there. I see one person has raised their hand. But for most point, let's pass it to you folks in the audience. So let's see what kind of questions you got.
Yeah, all right. So, the system's declining borrowers at pre-qualification due to lien positioning. How do we let the system know the borrower wants to pay off the current second and get a higher credit line?
That's a really good question. We did an enhancement around the same time as the 90% CLTV. So last Friday, we kind of shuffled around some of our AVM vendors and we actually took one with a higher validity score and put it above. So I would say rerun the inquiries if you haven't done it since last Friday to see. When it comes to actually lien matching, lien payoff, that's currently what we're working on. And especially it comes to multi-lien payoff. I know it doesn't sound like it when you're talking about like just junior lien payoff, but this is something that our team is looking at, especially when it comes to our vendors, what they can do. And we're actually taking, the feedback as well as the data on this. So it is something I'm gonna stop, really doing the whole Alex spiel, right? I know it's frustrating. You run the inquiry, you don't get offers. We can't pay off a lien when there's obviously a lien, right? We see that data that goes to our top leadership. They're working with our vendors now and basically seeing how we can really work on that. So it is our literal number one thing that we're looking at right now. To me, it's being worked on and we're going to get better in the future. So to me, I said that twice, but for the inquiry, run it. If you get no offers, okay, find another solution for your borrower, but just know it's our number one priority right now. We're going to re-release multi-lien payoff, and then from there, we're going to increase our vendor capacity and a few other things. So,
And somewhat related, says having issues with direct debt payoff for existing figure HELOCs, the client's intending to replace with a larger new figure HELOC.
hey, Lando, I think you brought that up today.
Mm-hmm.
Yeah, I mean, look, once again, it all depends on how things are reporting, what data is being pulled in. As Alex mentioned, the easiest thing is we're aware, we understand, we're working to improve it. If it doesn't populate, it's not an option. I understand it's frustrating, but don't waste time spending on it. It may just be an option where we're not the avenue for this, and that's okay. But we understand it, and we are working avidly to fix that. That's the best advice I can really honestly tell you. That's an honest answer.
The other thing, this really doesn't apply to figure liens. Well, I'll apply to figure liens. One, figure liens need at least 3 months of payments. So keep that in mind. I know most borrowers are going to do that, but I've run into a couple times where the borrower pays it off and 2 months down the line, they're trying to get a new one. Just keep that in mind. For the rest of the liens, though, what I'm finding a lot of times, though, is keep in mind for anything that's not a figure lien, there are a couple of states where we can't do lien payoffs. So I've had a couple times where loan officers have said, hey, there's a lien on the property. I've tried to run direct debt payoff and I can't do it here. It's just because we don't do it in that state. So look in the resource center. I do have a direct debt payoff handout. It's very, very short. As well as for a lot of you, especially figure wholesale, we do have that AI chatbot that we've enabled. So you can go in there, ask that a question. Sometimes it really is just a state requirement. Other than that, though, to Lando's point, we are seriously taking this seriously.
90% CLTV available in Texas?
Ooh, good question. Yes. Primary properties only. That's the big thing.
All right. Can we add a co-borrower to the HELOC? The answer is no.
Mm-hmm.
In most states, all but 14, we can use combined spousal income. So kind of the cool thing about that there, right, is we can run two incomes versus one liability, right? But no, we do not have co-borrowers. And it's important to realize it is spousal income. I fielded a couple questions in the last couple days about there's instances where siblings own a home together, or like a parent and kids bought a house together, and stuff like that. They do have to legally be spouses. Okay. Win back options. Does that mean that we can choose DDP at revise offer or modify offer to continue with less income than originally anticipated?
Oh, that's a really good question. Yes, 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 yes. So, a couple points on that. So, there are different stages of both the inquiry and application flow. It really will depend on where they are at within that funnel for it. I'm trying to pull up a demo right now to show y'all. During the inquiry, when I say win back, I mean they do not get offers. But what are this automated underwriting systems doing is it's basically saying, okay, they didn't get offers. Let's see if we can try to get them, offers based on, qualification. So let's say I go in here and I run an inquiry, right? And what I'm doing is I'm running an inquiry and the DTI is, let's say 55%, 60%. It's above our 50% threshold. Everything else is great. CLTV is great, FICO is great, all that fun stuff. What our system's going to do here, well, we can't get offers because their DTI is too high. It's going to bring you to this asset depletion screen. It's going to say, hey, the borrower stated income's not sufficient, but we can try other things. So number one, you can restate the income. Again, it's annual income, not monthly. I see that happen a lot. State other income. This is where you can put asset information for asset depletion. So this is where you can put like retirement account information, investment. I see a lot of money market accounts, things like that, that they can link up during income verification. But to the question being asked, if you scroll all the way down, this is where you can see debt payoff. So with that, what it's showing you is only debts that are qualifying, meaning only debts that will affect DTI. So in this case, it's going, hey, they have a personal loan, they have an auto loan. Maybe if we pay these off and it'll lower DTI, maybe they'll get offers. And so it's going to be pre-selected if you hit save and continue. And this can do the same thing with things like liens. Credit cards are a bit more tricky because they stay open, but they could potentially qualify. Now the system's like, okay, where there wasn't offers, we didn't get offers. Now we're getting offers. So that's during the inquiry flow. But on the flip side of that, right, if I'm going to take that question as well, if they're at like income verification during the application and they don't verify enough income, it's not going to give them direct debt payoff. It's going to maybe give them counter offers. If they verify less income, they can try other ways to verify income. But it's really at that initial offer, that initial point where we're running things, that we're going to allow these different paths for direct debt payoff or lien payoff to try to win back the file from what would be no offers.
We lend in Hawaii and we have a jumbo loan limit.
That's fun. It depends on the partnership type. If you're Figure Wholesale, no Hawaii, right? And that's just because Figure currently doesn't lend in Hawaii. But if you're like a correspondent, like a retail partner with licensing in Hawaii, absolutely. So check internally. Jumbo loan limit. I really just say max 750,000, unless you guys say otherwise.
No, that's exactly right. Yeah, 750K is the maximum we'll go up to.
All right. So if I'm hearing this correctly, all liabilities, including first and second liens, will now appear in the IntelliDebt feature, so we can pay off a current second lien HELOC through that and not touch the first. Plus, we can pay off any additional liabilities, even if they previously were not appearing as an option in the IntelliDebt feature. Is that correct?
Couple of things on that. Number one, it is going live, right? So multi-lien payoff currently is turned off. We're going to turn it live once we fix a couple bugs. So really what multi-lien payoff is currently you can pay off junior liens. So you can pay the most, junior lien on the file. What we're doing multi-lien payoff is saying, okay, you can pay every lien off on the file, and so you can make those selections. So that's what we're doing with multi-lien payoff. So yes, absolutely. In that case, it could be like, oh, they have a mortgage, they have a HELOC. Let's decide what we want to pay off. And then same thing, we can still currently today pay off credit cards, personal loans, auto loans, home improvement loans, right? The only caveat to that, I'm going to add on this, is every partnership type is a little different with different overlays. So check internally. Most partners have it enabled. Check though. Some don't. And I just want to put that little disclaimer in.
I think one thing to clarify in that question, Alex, is it still has to populate via IntelliDebt. If
Right.
IntelliDebt does not pull it in, it is not an option. We cannot manually add in the other liabilities or debts. So we are still liable to what we're ingesting from that third-party vendor to be able to pay off those debts.
Yeah, there's a weird part of that question where it does say like pay off additional liabilities if they previously weren't appearing. That part is still largely the same. What we are adding is the ability to pay not just the junior lien, but additional liens on the property. Right. Can you do a first lien purchase on a condo, no questionnaire, W-2 income only? Yep.
We cannot do purchase.
No, no, we can't do purchase. I'm sorry.
Yeah, we
Yeah.
cannot do a purchase.
No.
We can do we can do a home equity line on a condo without any
Mhm.
questionnaires or anything else. And we can manually review a pay stub or link transcripts or bank statements to support their income. So those would be options, but we are not set up for purchase.
Let's take a small caveat to that. Keep signing up to the webinars. That's what I will say. Just keep signing up to the webinars. Maybe one day. Maybe one day.
If we have a borrower doing a HELOC on a property that has two other owners, but they are not borrowers, how does the closing work?
Say that for me again. Let me visualize.
Yeah, so
Additional signers.
there are additional signers. Yeah,
Correct.
so when you go to when you go through the process, you are going to have to um, add information through the application process on any additional signers, and that's going to include other owners of the home, even if they're not on the loan, which they're not going to be because we don't have co-borrowers. And you trigger that motion sensor. Um, yeah, you're going to enter additional signer information. They're going to set up their own accounts. They have to be different emails. I don't know if people do it
Mhm.
anymore, but people used to have like the family emails for everything. But make sure that you're entering information that is in a separate email from the applicant's email. They're going to set up their own thing so they can go ahead and do signing on their own.
And to be clear, Mike, it's the borrower who's entering it. And so they're
Correct.
going to enter it at the end of the application after note signing. So you're going to see the notary preparation step. So after note signing, the borrower enters in the additional signers, not having their credit pulled. And then we're going to make sure that all the correct additional signers are added on there. And then they're just going to have to be there, for the notary, either digital or in person.
Okay. Brian. So I'm going to leave this up for people to read in the Q&A, and Brian makes some good points here. So I'm going to leave it up so people can read it as they wish. But I'm going to kind of pull a couple of things out of here. So he says one thing I'd really like to encourage for everyone to think about is how we're serving our veterans. I'm seeing a lot of VA borrowers getting targeted to refinance out of their incredible 2, 3, and 4% mortgages just to consolidate debt. Sometimes that's the right solution, but not always, right? So I think from there we can kind of
No,
take.
I fully agree with that. I work with a lot of people that help senior borrowers, right? And I have a grandma myself that I love very much, and I help her with some financial stuff. And that's the biggest thing to me is we should all be doing what's best for both our veterans and our seniors, especially, people with those 2%. We're going to do multi-lien payoff. Mike, I know you've dealt with a couple situations. Let's make sure, once that goes live, or even with junior lien payoff, that we are doing what's right for them when it comes down to rates, to payments, what they can afford, especially veterans.
Yeah, right. I mean, you're their financial guru here. Okay. You're obviously, I don't think we need to tell you that here, but you should have their best interest in mind and their best financial interest. And you're right. Sometimes the HELOC makes sense. You can consolidate debt. It frees up like some cash flow restraints. And sometimes even though they do have a low first mortgage, when you're paying off a ton of other high interest debt and that blended rate becomes reasonable where it does make sense, sure, right? But go through all those scenarios and all those options and really decide what is going to work out best. The HELOC is not the most important thing. We talk about how to position the figure HELOC with your potential borrowers and saying like I can get you a HELOC at X%, right? That's not a good selling point. Okay. The good selling point is what solution or what issue or what problem they're having are you solving for? A 7-8% HELOC is not a problem. Like that's the solution to the other pain points that they have. So if it over the whole course of everything makes sense, absolutely, but that's not always the case. Right. Can you confirm if the compensation is lender paid or borrower paid?
Lender
So
paid.
the compensation is going to be lender paid on our HELOC. So just keep that in mind. And where the confusion in lies is the origination fee. The origination fee has nothing to do with your comp. Check internally on any comp information.
All right. Let's see. If we are to pre-upload the ID, can it be a scan since the borrower still has to upload the photo? We take copies. I think we answered this in the beginning, right?
Yeah,
Yeah,
I
we
think
did.
we did. Yeah.
Yeah. Okay.
Best thing is take a clear, concise picture. Scans are going to get kicked out.
Yeah. Can I put a figure HELOC behind a reverse mortgage?
No, not at this time.
Let's see. Almost every file is declined due to DTI because it will not let me pay off debt. 90% of these I have been able to place with other lenders. Sometimes.
It's good feedback, and it's definitely something that we're looking to track more. We're really getting into, especially here at this on-site, like especially data tracking on like the pain points. I think that's a big reason we're doing that multi-lien payoff, as well as we're looking to do other things. And keep in mind, that's a big thing we're looking at, but we're still wanting to keep within that road of making this as fast as possible, right? We don't want to have those underwrite processes. We don't want to have those things. So we're trying to automate and we're trying to keep in that fintech space. So absolutely, it's good feedback. And trust me, we are trying to document as much as possible to bring it to product to say, how can we solve for this while keeping our product, in that space as much as we can. So 100%. Trust me, like even just showing you these features today, and I've been doing this 6 years now, it's just going to keep getting better and better.
And look, the beauty of figure, right, is in 2 minutes you have your answer one way or the other, right?
Mhm.
Obviously we would like to cut down on some of that fallout that's getting sent to other lenders and that type of thing, right? But it's a great first look. And in 2 minutes you have your answer one way or the other. We don't have underwriters. There's no one to go talk to. There's no way to kind of force feed this. So, but like I said, it's a great first look. If it works, it works. If not, you can find another solution. Can you show where you went on the restart to upload an ID? Had so many issues with this, lost a couple of deals because of it, because they get frustrated. Yep, that's why I'm very excited about this ID upload. It's going to cut down on a lot of those issues. But yeah, can we go back, Alex, in the demo to where you can restart on the upload ID upload?
We absolutely can. And keep in mind, once this goes live, it's not live currently. Keep that in mind. And I'll be emailing out some information on this, but once it goes live, it's going to be right in the inquiry itself. So with this, you are just doing it straight there in the inquiry, and it's going to be listed at the top. And again, apologies about the text, but this is something where there's going to be an upload ID button at the very top. And once you go ahead and click on that, that is an optional way for you to go ahead and upload the ID to pre-fill that information. Keep in mind, if the borrower has a current application, if their ID fails, it's still going to be a condition that you can then upload the ID on the file. But this is for you to just pre-upload, pre-fill, upload it during. So once this feature goes live, I can't give you a current date. I know it's coming very, very soon. They're just doing a little polishing. You're just going to see it every time right there in the inquiry. So pretty easy way to know it's live is once you start it, you'll see it.
Is there a rep that I can speak to or DM? And Elisa, just send an email to salessuccess at figure.com and we'll get you pointed in the right direction on who you can talk to. All right. And then can I do the app for them since I have all the info?
No, you cannot. And that's one of the big things too that makes it so fast is we do need the borrower to enter it. A lot of that comes down to like both compliance and what's called KYC, know your customer. We need to be them to be entering in certain information. That also comes into like that ID upload. We do need them to enter it in during the application at a certain point. So keep in mind, it's really only a couple of pages, but the advice I always give You can still screen share. You can still sit down with them. You can help them through it. You can be on the phone with them. And we do provide customer service. So the borrower always has a phone number listed at the top and that little chat button. And we're open on the weekends. So let them know they're always going to get help. You can't do it directly for them, but there's a lot of assistance for a borrower and they can get it done in 15, 20 minutes.
All right, how do we get correspondent access?
So for things like core, you can reach out to us. We'll probably get you in touch with our sales team. A lot of these we do have requirements for, keep in mind currently. So if you're under figure wholesale and you do want access to what is called our Kickstart program, we're looking for a couple million a month. We're looking for activity. We're looking for, X amount of volume. So if you want some information on it, email us, salessuccess@figure.com. I'll send out an email with information. And then we can direct you to our sales team that does handle that kind of stuff that can get you more information.
Is there an option for a higher rate to waive comp?
No, not at this time.
I'm new and I need access to the portal. How do I request that? Again, send an email to salessuccess@figure.com. We'll get you set up with your company admin that can get you set up in our portal.
Or reach out to your products department internally. They may
That's
have that ability as well.
For credit card debt being paid off, do you mail clients a check to send, ask them to upload statements, ACH the payments directly to the credit card provider? How does this work when we're selecting the debts?
It's so nice, folks. Listen to me. It's sent via a wire, which is so big to me. That's a big selling point. So the big thing there, and I'm going to keep saying the word big, is the credit card selected, it's just going to be paid off via wire. Borrower gets any difference back, like if they have an auto pay discount or something. So you can tell the borrower it's nice and easy, it's peace of mind. And I have a lot of partners that come to me that literally just go, oh, this is incredible, simply because they don't have to deal with checks or anything. So nice and easy, but do keep in mind the credit card does stay open. So there's a little bit when it comes to restrictions on qualification for DTI reduction, but you'll see it right there in direct debt payoff, and we'll be able to pay that off.
I entered an app and received options for a $25,000 HELOC. Client had a typo in the social security number when she sent the information. File was required to be canceled and restarted. Restarted the file. Basically didn't get an offer at the end of it. Is there anyone that can take a look at it?
I would say for that one, I'll stop being goofy for this one. Social Securities, sometimes we have big issues with simply because when they restart it, we do things called modify restart in a lot of those kind of scenarios, especially like name stuff, where we try to keep the same pricing. For Social Securities, they're tied to the profile, meaning if they restart, we're keeping the same social. And there's a lot that goes around that. I don't want to get involved, but that's where our ops team comes into play. They need to do a lot of manual work. They need to detach some things. It's a whole process through compliance. So that's something you can set the expectation for with your borrower of, hey, when you enter in your social, when you're going to confirm that, double check to make sure there's no typos, number one. But if that situation does happen, that's where you should reach out to our ops team, call in directly to them, have that conversation. They're going to need to basically go down a manual path to provide that assistance with that. And if you do have questions on that, salessuccess@figure.com, we can kind of take a look and point you in the right direction to get a solution.
Does Figure lend in 50 states?
Yeah, everywhere but Hawaii. So 49, whatever that number is, not Puerto Rico.
Let's see. Yeah, Brian, I think this was a question from earlier. The CLTV, lien position, 705 credit score, 70% LTV, 40% DTI. He just wants to lower the Figure lien interest rate and maybe take out 15. Yeah, I think this is from the question from before.
Just run the inquiry. You'll see any available offers you have. So that would be the first thing I would tell you to do.
We can do a Figure HELOC in Texas to 90% LTV.
Yeah, again, primary properties, and that's a big thing to me. Texas is so different, folks. This is something I really want to mention to you all. There is in the Resource Center a Texas-specific document. We've been running up to this a lot. So keep in mind, right, it has its own requirements, its own rules, but that's going to be the big thing. Speaking of which, I probably have to update that document in the meantime. But yes, keep in mind, 90% CLTV now. That's going to be the fun thing. So just keep in mind.
Yeah. Is self-employed, oh, if self-employed, income coming into the business account and to a personal account, can you submit both accounts to include all of the income?
Yeah, absolutely. And keep in mind there, right? Bank accounts, they all add up together. So as long as they connect them and they're all via Plaid, we're good to go. Just make sure that third-party access is enabled or really your borrower. But yeah, absolutely. That to me is a big selling point too for income verification.
All right. Are we able to add spousal income without them being on the loan and not pulling their credit?
Yes to not pulling credit, but they will have to be on the loan, but not as a co-borrower. I want to be clear about that, right? So not in that traditional sense of I'm adding a co-borrower, I'm pulling their credit. This goes back to what we were talking about with additional signers. So like let's say they're in California or my great state of Nevada. Great, we're adding on the spouse. They'll just be added at the end because it's usually something like a community property state where we add on the spouse, they do the signing, but that's primary property.
Yeah,
If it's like
they're not going to sign the
investment,
note.
no, that's where it gets fun.
Yeah, they're not going to sign the note or have any obligation to repay. They're not going to be able to do that. They're basically signing an affidavit of acknowledgement that a lien is being placed on their property. That's it. It's
Exactly.
title, basically title only, so to speak, in normal mortgage terms.
And we're not pulling their liabilities because we're not pulling credit. Think about it. So,
Will we be able to look at a turned down file now that we can pay off debts?
or just restart the inquiry. And the big thing again is multi-lien payoff is not currently live. We can currently pay off junior liens. But any of these features, once they go live, you can just restart the inquiry or run a new one and then see what offers are available.
Layered LLCs, series LLCs, and trusts. Can we lend on those?
We can do trusts if they're revocable. We need the certificate of trust specifically. So keep that in mind, not the full trust agreement. And we can do LLCs. Keep in mind, though, for LLCs, the borrower is going to be the guarantor, and we're going to pull credit for them. So nothing like layered or nothing of that nature. It's just LLC. We'll request some documentation, and then it's going to go through that borrower.
All right, max amount for a HELOC in the second position.
Run the inquiry is really what it's going to come down to. And the reason I say that, right, I'm not sidestepping the question. It's because the max amount depends on things like their FICO score and it depends on CLTV. If you want an exact answer, go into the Resource Center, my product guide. I have a full eligibility table where you can see those different breakdowns. But really, what it comes down to at the end of the day is going to be, those different factors for your borrower. So just run the inquiry.
So, yeah.
I'm in the dark
So,
again. This keeps
let's
happening.
see. How does the draw system work for a loan that is closed?
So they're going to have a redraw period, right? I want to make this clear, depending on the loan term they select. So for a 30-year term, 5-year redraw period, 20 and 15, 4-year redraw period, 10 is 3. This is very ominous and scary when I get this kind of lighting. So they're going to have a certain number of years where they can do draws as long as they have the available credit. And it's principal plus interest payments, right? And they can do extra payments because there's no prepayment penalty. So they'll have that availability. But after that time, right, it's just monthly payments. So that's where things like lien payoffs going to come into play. Turn the lights on.
All right. I have a borrower with the property that was blocked from public records. It's been removed for several weeks, and I did confirm with the county.
Yeah, I mean, the biggest thing with this is, yeah, the county can remove that request right away, right? A lot of this happens when you're dealing with people who could be veterans, police force, things along this line. The one thing you have to understand is we are pulling that property information from third-party vendors. The vendor has to be made aware, their records have to be updated to allow us to ingest that information that is now available in public record. This can take some time. It could be quick. It could take some length. You're going to have to keep trying to see when it populates. But unfortunately, the county's instantaneous. It doesn't mean all that information then gets shared and updated with all the vendors who pull from those county records. So I can't give you an exact time frame because it could be across the board. I normally tell people it could be 14 to 20 days. It could be a little longer. You're just going to have to run the inquiry, wait and see when it populates, but no way really to know how fast the vendors get updated. That's a tough one.
Has the LTV for a duplex gone from 75 to 90?
Oh, no. So specifically, there's going to be a different section when it comes to like those type of property types. So like, 2 to 4 and things of that nature. So again, look at the resource center, right? I have it all broken up. Really what we're looking at is like SFRs and the like. So keep in mind, it really comes down to running that inquiry at the end of the day. I hate saying that over and over, but it's the most powerful tool to an answer. But again, I do have the eligibility matrix kind of opened up. You're going to be able to see kind of more information on that. But really, it comes down to, those non-MFAs that you're going to be able to see have that 90% CLTV increase.
A borrower came to me today for a HELOC. I put in his inquiry and it said he has an active application with Figure. Is there anything that I can do? Um, they're gonna have to decide which one they want to run with, honestly. So if they have another application with that same email, or even, I mean, it doesn't really matter because we're gonna find out eventually. We can't have two active applications running at the same time. All right. All right. Trust reviews are taking up to 5 days at one point. Should they really take 5 days to review 1 to 3 pages of a trust cert?
The reason for that, and we're working on this, is really it comes down to the trust review goes to a specialist team dedicated to trust reviews, right? Because the certificate of trust, as well as a few other things, right? We match it up with the probate code and a few other things. So it's not the general ops team. It really comes down to, okay, this is a team. We need to match it up for legal reasons, and we need to make sure it's okay, especially for our investors. So I know it seems like it takes quite a while. It really comes down to just more of a work queue. So again, we have really good leadership and ops, and one of the big things they're doing, they're basically going on a hiring spree. They're going on a promoting spree. They're getting those teams on there. So really, it comes down to, hey, we're doing a lot of HELOCs right now, and that's a good thing. But especially if, like, hey, that maybe this is taking a little bit of time, it's kind of going on. Call in the ops, let them know, hey, we need to get this expedited. A lot of times, what happens is it goes into the queue and it's just being worked through. Let them know. But again, it does take quite a bit of time for them to, grab that and make sure, for those legal matches on the probate code, everything's good for us to fund on those trusts. So the sooner we have that certificate of trust uploaded, it's a condition that fires right away. Sooner we can get that in. We're going to review that, once we get to that notary prep. Just let them know though, if you need it expedited, ops is incredible and they're happy to help.
All right. In a previous training, you stated that if the LO inputs the info, there's a higher completion rate. It's in conflict with the question you answered and said we can't input the info. I think we need to kind of clarify what we're talking about here. So yes, the first part is true. When you complete the inquiry, and that's the first part of this where we basically essentially pre-qualify the borrower, right? There's a higher pull-through rate, there's a higher success rate. After we do the inquiry, that first part of it, we're putting their name, their address, how much money they make,
Yeah.
and all that kind of fun stuff, right? And send the application to the borrower to complete from there. That's the part they have to do themselves. When we say you can't just do the application, we mean you can't do it front to back, get it to closing, have them sign, and then be done with it, right? We need to kind of
Yeah.
separate the
Yeah.
two.
Yeah. You're doing the pre-quality inquiry. The customer is driving all actions after that as part of our compliance piece.
And I'll elaborate further for Figure Wholesale, right? We do have like correspondent retail partners that do have a direct referral link. And that's a big thing I'll do in trainings is I'll let them know to use the inquiry because there's a 52% higher pull-through rate on the inquiry than if they just do it yourself borrower when it comes to that initial inquiry information we showed. So just keep that in mind. Let's do one more and let's go ahead and
One
wrap this
more.
up.
I think I found a good one.
To like hunch over a little bit, folks,
Yeah.
just because my laptop's slow. Apologize.
Can you spill any beans on the Kiavi acquisition?
Oh, okay. Yes, I absolutely can do that. I like that one very much. Okay, listen, first off, Kiavi's amazing. I'm very excited about this. The beans to spill is our DSCR products about to be really, really nice. So if you're really interested in like DSCR or something of that nature, I say wait about 6 months, a little bit more. Of course, we have DSCR for a lot of our partners and Figure Wholesale. It is really good as a refinance with cash out option. But you may have noticed we haven't really talked about it recently. Well, that's because Kiavi's coming in and we're going to be doing a lot with that. So it's going to be on a lot of future webinars. I'm talking future like 6 months, right? But keep in mind, Kiavi's coming in, fix and flips a bunch of other things. But look forward to DSCR. I'm very, very excited about that. All right, folks, let's go ahead and wrap this up. A couple key items. First and foremost, thanks for dealing with my hair today. I kind of was just going with a Superman look. So there's that. Thank you, Mike Orlando, Lando as well. You guys are fantastic as always. I really appreciate you both, especially dealing with me just in general. Folks, I'm going to be sending out again an email. It's going to have a ton of information. I'm going to be linking in a demo, as you guys saw, and a bunch of information. And I'll be getting the recording up on YouTube. Please just bear with me a little bit. I will be traveling. And this is probably something that may take me a little bit of time on my laptop to kind of process that. So with that all, you guys have a fantastic week. I will see you in 2 weeks for our next webinar. But as always, salessuccess@figure.com. You can reach us there. And with that, have a great one, everyone. Thank you very much.